Hello everyone. Welcome to another video on this channel. And today we're gonna do something different than usual. Today I'm gonna share with you a strategy that can earn you hundreds to thousands of dollars a week or a month. Depending on the size of your portfolio, this is one of the most consistent and less risky strategies there is out there in the stock market to just earn passive income. And this is the way the big investors are doing it and are making so much money. First of all, you got to be a little bit familiar with options. Now, I do know many people that are familiar with options and are buying options. However, I do not know many people that actually sell the options, and the beauty of this strategy is in the selling of the options. Now, first of all, you gotta need 100 shares of the stock you're selling the options with in order to apply this strategy. So it's really important. That's the first thing you gotta know if this works for you. You gotta need 100 shares of the companies. For example, Palantir, a stock which is doing absolutely great recently. Let's say you got 100 shares of this company, then this tactic will work for you. So what you want to do is you want to go to your broker or to your platform where you're buying your shares and your options, and you want to go to the options tab. And here you go. This is the options tab. Now you want to be going, for example, the options for Friday. You can already apply it immediately. Let's say the 1650. You can sell one option contract as you have got 100 shares, and you can sell it for $32. So it's 100 times 32 cents. You sell the option, you immediately collect the $32. It will be added to your cash balance, and basically that's it. You got the money. Now, of course, you're thinking, well, it can't be that easy. Well, it is that easy. The only thing is, of course, if the stock of Palantir goes above the 1650 at the end of the week, means your option will be assigned because the other party that bought the contract from you will assign that option, of course, and that means you got to deliver those shares for $16.50. That's what you're going to receive per share plus the premium you already collected, so the $30. Now, let's say the stock of Palantir will not exceed the $16.50. That means that you just keep the money and you keep your shares as well, and you just basically earn a free $32 without losing your shares. Now, let's say the stock of Palantir tomorrow or today goes up into the 1650s. You think, you know what? I don't want to lose my shares. You can just go to next week or next month, and let's say, you know what? I'm just gonna roll it over to the $17, collect more premiums. You're gonna close the 1650 for this week, and you're gonna open the 17 for this. You could even earn more money, and you're just gonna wait. And just when the stock goes up, you can always roll over to a next week or a next month. It's basically that easy. Now, are there any risks? Well, of course, let's say Palantir today drops to $15 or $14 next week, then you lose the value as you got 100 shares, so the $1,600 become 1,400, but you still receive that premium from those calls. So let's say next week it dropped and your option has expired, you can easily just sell new contracts at a lower price and just collect more premium. So in the end, even though the stock does go down, you will be able to earn money through this. It doesn't really matter if the stock goes up or down. You can just sell, and any time when the market is open, you can higher or lower the strike price. You can roll over to a next period. It's that easy. So now let's use another example. Let's use the AI stock. It's also a very popular stock at the moment. So the more volatile the stock, the higher the premium and the more money you can earn by applying this strategy. So for example, AI. Now this stock is currently at $43.11. And as you can see, it's really volatile. Now, let's say you got 100 shares. Now, let's say you got 200 shares. So you got $8,000 worth of this share, and you're thinking, you know what? I want to earn some extra money. For example, you could go to the 21st of July option series, then go to the $45, and then you can just say, you know what? I'm gonna sell two contracts. I have 200 shares. I'm going to sell two contracts. It means you're going to be immediately receiving $1,040 immediately. So market opens, you're going to sell two contracts for $5.20 per contract. So 200 shares, that's $1,040 you receive immediately. Now, if the stock does not exceed that price at the 21st of July, it means that you keep your shares, and the money you always keep the money basically. So if it exceeds the 45, you might get assigned at the 21st of July. However, of course, as I told, let's say the stock moves up to 47, 48, and you think, you know what, I don't want to sell my shares. You can just go to the next month and you say, you know what, I'm going to sell the 50 or the 52.5, and you're just going to receive more money as the stock has gone up already as well. So basically, you can infinitely do this. And at some point, the stock will go down, and then you can sell it at a lower strike price and receive more money. This is basically an infinite way of making passive money. Again, the only way that this will turn out very bad is that if a stock completely collapses, and I mean, you always keep the money you got, but the money you received from selling the shares will not weigh up to eventually the loss on the whole position. So, but if you hadn't sold the options and you would have just kept the shares, you would have lost even more. So that's basically the thing. And also the other thing I do want to say, and which is probably the most important thing I want to say in this video before using the strategy, is that never, 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 never sell your shares when you still got the open contract. So when you still have the open position on the options. Why? Because that means that you still have, let's say, two sold contracts of the AI $45 option, but you sold the shares. That means you have naked calls. That means you are not covered by your shares anymore. So that means that if the stock goes up a lot, you can and you get assigned, you don't have the shares, so you have to buy them from the open market. That can get very nasty when the stock goes up a lot. Now, usually, almost all brokers, almost all banks even prevent you from selling those shares when you still have the options, and others already require you to have high margins. So when it happens, you immediately notice your margin will go up through the roof. Maybe you immediately receive a call or an email by your broker that they say, oh, you're in trouble. Or usually the systems will even prevent you because of the high margin you gotta need at that point. But that's the only thing that you shouldn't do, is sell the shares when you still got the options. Besides that, there is literally no risk in applying this. Now, of course, if AI goes up to $60 and you still got the $45 calls, yeah, you missed out on the whole $15 run, but maybe you would have even already sold it at $45. And even there's a possibility that you think, I can just always roll over to a higher strike at a later period in time. Because as we all know with options, for example, January 24, 70 is already at $6, a 60 at $7, so that's $700 per contract you sell. So basically, the options you can apply the strategy are endless, and there is literally no risk, unless, of course, as I told you, the most important thing, you are not covered by your shares. So always, always only apply the strategy when you have got the shares. Now, the last example I want to show is Nvidia. So this is how the real rich people make the most money. So for example, I mean, I'm not expecting big investors to watch this video, but let's say you got 1,000 shares of Nvidia. So that means you got worth 400,000 shares of Nvidia, almost $500,000. Now that means you can sell 10 options. So that means that a big investor that's already rich looks at the July 2023 and thinks, you know what, I have 1,000 shares. I can sell 10 options. Well, I'm not expecting Nvidia to go much higher in the upcoming month. Here I go. I'm going to sell 10 contracts of the $450. That person immediately collects $10,000. So let's say you're already rich, you almost get half a million of dollars in Nvidia, and you immediately can collect $10,000 of premium. And this is how the rich people do it. This is how they make the money. They sell it and then they just keep it. And let's say Nvidia moves up a lot and almost goes above the 450. They think, you know what? I don't want to lose my shares. I'm gonna roll over to August and I'm gonna sell the 480 at that point or the 490 at that point, and I'm gonna collect even more money. It's crazy, but this is the way that the rich people make more money on the stock market, on the option market, and this is how they make the passive income. So even when the stock goes down, they already compensated with that via the options. Now, please in the comments let me know if this was clear, if you want to get a broader explanation of options at all, or if you got any more questions about this way of making passive money. Please let me know. Also in the comments, let me know anything else if you want to see other stocks discussed on this channel. Don't forget to leave a like and a subscribe. And I hope to see you all the next video.